Hello and welcome to the Today's Money Masters. I'm Jean-Paul Menu. The Today's Money Masters competition comprises 3 professional investors and a novice, each provided with $500,000 to invest. The participants have invested in stocks, bonds, and collective investment schemes, and they will share their strategies over this one-year period. At the end of the period, the top portfolio manager will be declared. So let's continue with the masters on this very exciting journey. Welcome back. On today's program, we are joined by Timar Jackson, one of our professionals. He's from NCB Capital Markets, and Chrevaughn Legister, our professional from Proven Wealth. Good day, gentlemen. How are you doing?
Good day, Jean-Paul.
Welcome to the program. Nice to see you guys. Timar, name one of the stocks that you see coming out smelling like a rose after this pandemic is over.
Well, I've been captivated by the smell of Separate for some time, and I think the smell continues to hold me. I think when you look at what is going on with Separate, fundamentally the company has been performing well. Last year they spent quite a bit of effort to consolidate their entities. They bought the distribution division of Facey company, and they basically integrated that. They reorganized their dairy division, and last year as well they made a very big and important move to get rid of their sugar production line. So with that, the company to me is a much leaner and meaner machine, ready to actually give us some sustainable growth into the future.
Okay.
Now, it's important that everybody realize that we're currently being affected by COVID, right? And a number of sectors within the economy are being impacted as a result of what is going on with COVID. When I look at Separate as an entity, it operates in what you call a consumer staples space. You know, these goods that Separate produce are consumer goods. These are goods that we need every day in order to survive. Food, milk, right. You know, oil, rice, flour, butter, your supplement and so forth. I think Separate has something for every single point in the day. You know, for your breakfast, your lunch, and your dinner. So I think demand for Separate as a result should remain fairly constant. The company seems to be in a very good position as well in terms of their supplies. Last time I checked, the CEO indicated that they have over 3 months of supplies here in the island, and they're working on arranging more. So there shouldn't be any major issues in terms of shortage to meet the demand out there. So I feel fairly good about their position, not only fundamentally coming into this crisis, but also their ability to weather the crisis and also benefit, you know, from what is going on as well.
Okay. Well, 3 months, we'll see. Some people are saying this is going to be a 1 month, 2 months, 18 months, I've heard from the U.S. Chrevaughn, do you agree with Timar?
All right, so my esteemed competitor, you know, I believe has hit the nail on the head, right? I agree with Timar from the perspective where he speaks about Separate operating within a consumer staples sector division, right? I mean, these are goods that we need. They aren't necessarily easily, the sale or the demand for them aren't necessarily easily abrupted by changes in the economic cycle, right? So from that perspective, I agree with him. He touched on some points also that I believe are fundamental, right? In terms of the company being able to withstand supply shocks or demand shocks, right? So, for example, if I were to choose a stock of my own, then it would be a similar company such as Wisynco, right? Similar sector that they're operating in, right? And they share similar features as Separate as well, in terms of being lean, in terms of reorganizing or, you know, always developing themselves as well. and also their fundamentals are strong. Strong balance sheet, the earnings are good.
Okay.
Yeah. So, I mean, if you would allow me as well now to speak more about Wisynco.
Absolutely. What is your victory stock? That's yeah.
Sure. So, continuing from where I left off and what Timar has said, we have to put things into perspective, right? When I look at, a victory stock, I am thinking about if the company is resilient and where it will be in the near to medium term, right? Because of what's happening.
Right.
So clearly, some companies will be affected more than others,
Right.
depending on the industry. We see what's happening with tourism right now. So some companies are directly affected because of that's the market that they're in, tourism. A company like Wisynco and also Seprod, they may have some exposure to the tourism industry. For example,
sure.
Wisynco supplies hotels, and also it's affected because it supplies schools as well. School is out,
Sure.
right? I mean, Seprod may just as well be a supplier of schools, right? But then, when you look at it, the fact is that Wisynco, so there will be some short-term shock to demand for the products from Wisynco, right? But overall, I mean, if schools should start back within the near term, and we don't know, but we expect it could be after April.
Fingers
right?
crossed.
So fingers crossed. So right then and there, then you would get some demand for Wisynco's products right away, right? Hotels will take a little bit longer to come on stream, right? But I don't expect the earnings of Wisynco to be largely impacted by COVID right now, right? Because, I mean, there's retail demand. Persons are home now, so they still have to stock up on beverages, right? Also, why I think Wisynco would be a stock that could come out and weather the storm. Over the last 4 years, the company has gone through a lot, and they're still standing. I mean, you may recall there was a fire in 2016.
Yes.
Right?
Yes.
After that, then you may recall also that recently they had to contend with the reduction of the sugar content within their beverages, right? Most recently, the styrofoam plant that they operate had to be shut down, right? Because of the ban on styrofoam products,
Yes.
right? But what has the company done? The company is now looking to implement their cogeneration facility, which is a facility that makes it more efficient, right? So when I look into this, if there's going to be some shock to revenue, but yet you're still looking at cutting your operating costs as well, then the bottom line should be a little bit sturdy, right? The margins should still remain pretty much healthy as well. I mean, I know I'm talking a lot, but if you just allow me to make one more point, because that's the fundamentals of the company. It's strong, right? Then my last point that I'd like to make in terms of, what a victory stock, as you call it, so we see where the price of the stock has come down, right? Importantly, what we need to look at is where earnings is going in the future, right? So I've seen and heard talks of people saying, no, it's a good time to buy, stocks are cheap. I have to remind people that you're not only looking at the nominal value, right? You're looking, because all these companies, the whole market is going to be affected in terms of their earnings, right? So yes, the price will come down, but where's earnings going to go as well? I think, however, that with Wisynco's falling price, and even though there's going to be some shock to the earnings, but not significant, you may get an attractive PE for the stock within the near term. Right?
PE?
Sorry, the price to earnings ratio.
Okay.
And it's really the price that you pay for each dollar of earnings that the company produces.
Okay.
But that's where you find value oftentimes for low PE stocks when you compare them to their peers.
Okay.
Right?
Okay.
And I mean, finally, if it is that the company can sustain their earnings, you could find that the dividends that the company pays could remain attractive. With the low stock price now, the dividend yield should be attractive. I mean, the dividend yield also is basically a cash return. So dividend is what you receive from the company from investing in terms of a cash portion.
Okay.
And compared to the price that you pay for the stock, it could remain attractive for for investors.
Okay, coming out of this.
Yeah.
Chrevaughn made a bunch of points, a lot of points. Timar, do you agree? How you feel? Why or why not?
I think there's not much room to disagree with Chrevaughn in terms of him choosing Wisynco as a victory stock. And definitely we've seen where the stock price has fallen off quite a bit. So that's a major plus. I'm however concerned that, you know, Wisynco might be more impacted by what is going on now in terms of COVID than what the impact that Seprod might experience. And I say this because when you look at the products that Seprod produces and distributes compared to what Wisynco distributes, there's some similarity, but you can see some large differences. So a lot of the products that Seprod produces are things that you can cook. You know, you have your canned stuff, you have your rice, your beans, and so forth. Like, you need these things, you know. I can do without an extra bottle of juice if I need to make a decision as to what beverage I choose. I can decide to just go with some water and make some fresh lemonade.
Right.
You understand what I mean? So there are ready substitutes to some of the things that Wisynco produces. So that's my major concern with Wisynco.
Okay.
I mean, I agree with Timar on that point. In terms of the range of products that Seprod produces are mostly used within the household. I mean, Wisynco's products may be more limited to, you know, beverages, you know. So he actually made a good point there.
Okay. Okay. So we would give Seprod the slight advantage.
I love the sweet
coming
smell.
out of this.
Yes, I love the sweet smell.
You love the
Seprod.
sweet smell. Extending that metaphor a little bit too much. All right, more from Timar and Chrevaughn after a word from our sponsors.